Well, morning traders. I want to do a quick update on stocks and specifically the NASDAQ and the S&P. It's very difficult trading at the moment because perhaps it's not all about what the Fed's doing with interest rates and more about the economy now. And one thing's for certain, there are a lot of conflicting ideas about the way this market's going to go during the rest of this year. We do know for sure, though, that there's a great deal of economic uncertainty and potential for an economic recession and problems in all sorts of sectors in the market due to high interest rates. There are people calling for the Fed to pivot this year, not only pivot, not only pause or halt interest rate hikes, but also to reduce interest rates. I don't know if that's going to happen. I don't think if anyone knows that's going to happen. And I'm not even sure that the Fed knows exactly what to do. So amidst all of this conflict and turmoil and uncertainty, one thing's for sure, we will probably see a flight to safety. In other words, an increase in the US dollar against other currencies, and probably some reluctance for the stock markets to move much higher. Having said that, who knows? I think the best thing we can actually do right now is just to focus on what we see technically on the charts. So let's have a look at the charts. We've got the S&P here. This is a day chart. This is probably the easiest one to read right now. We've got this bear channel or potential bear channel. And I say potential because in reality, the market's only moved sideways during this year. And any channels and trend lines, just this sort of chop that we're in, a very large chop, more like tides or waves than chop. And the market's ranging between fairly high levels and fairly low levels, which is very difficult for stock market traders to deal with because they're used to unidirectional moves. When the market moves sideways like this, people start getting bullish. When the market rallies, they need to be caught long. People start getting bearish when the market drops, only to be caught short. And that leads to a lot of uncertainty in terms of the way people take positions and view the market. If we look at the S&P chart, the very best we can do actually at the moment is just draw this bearish channel in and hope for the best. And what we see here is that we've broken down through the bottom of this channel and we're testing the underside of the channel as we speak. And just above us, we've got the 50-day moving average, we've got the channel bottom, and we've moved up into that channel bottom today after a couple of rallies up towards the channel line and then a couple of bearish days following that. And we've traded this quite successfully long and then short once having reached the channel. Right now, we're testing that channel and the 50-day moving average again. We are above the 100 and the 200-day and the 20-day moving averages. So we're sort of stuck in this conglomeration of moving averages, but we are below the channel line and we are below or at the 4,000 level, which is a key psychological number, of course. And we can see that the market has often reacted around about the 4,000 level where we are at the moment. So we've gone short on S&P today and we're hoping for a move back down to these lows at around 3,800, 3,820, and then potentially, eventually, maybe, if we get a break below this red line support at around about 3780, another key level, we might move down into new lows or at least test the current lows from last year at around about 3500. So we'll have to see what happens on S&P. You can also see that the previous break through this channel line resulted in a very bearish and strong, powerful reversal candle, followed by this one up, one down reversal pattern. And we're now just testing back into those levels right now. So it looks pretty bearish, but having said all of that, the market's pretty determined to go up, and it has been for some time. Every time we've fallen down, the market's been able to stave off that bearish move and rally back up again, and perhaps we'll see that again. What's slightly concerning is that on this last dip, we didn't get to the previous lows, so we've actually got a higher low here that's formed overall. But if you look at the expanded view of it, we've really just gone sideways in the midst of a very tumultuous and difficult market to trade, with gold and the dollar and bonds and energy prices moving up and down in very, very dramatic fashion. If we go across and have a look at the NASDAQ, on the other hand, this paints a rather different picture. And it's very interesting that the NASDAQ has shown so much strength in a market which one would think be a risk-off sort of market, but we've seen Bitcoin retain strength and we've seen the NASDAQ retain strength. So NASDAQ's not looking anything like the S&P. In fact, it's looking rather bullish. Having said that, we have reached this level here at 12,900, just below 13,000, and we have potential for a double top on NASDAQ. I'm not as willing to sell the NASDAQ as I am willing to sell the S&P based on the technicals. Remember I said earlier that in the face of a very difficult and hard to discern market, when we look at the economics and the fundamentals, it's sometimes very good just to look at the charts. And the charts on NASDAQ are threatening a bullish breakout above this double top. And actually, if you look further back into last year, it was an important high in September, and it was an important high in June last year as well. So this is a really, really key level. If we do break up through here, then there's every reason to believe that the NASDAQ could go all the way up to 13,600 and potentially higher. But if you're looking to trade the NASDAQ, I think the direction still needs to be short, and as long as we hold below this level here at 12,900, maybe 13,000, we could hope for a move back down to about 12,000 and then potentially back down to this green line at around about 11,000, and then we'll have to see what happens thereafter. What's good about this trade idea is that we can trade it with tight stops. If you're a swing trader, I'm not talking about day traders, but swing traders, you can trade this with a tight stop above these highs here. It's a very, very clear and well-defined level. I'd say stops above 13,000, and then aiming for around about 12,000, 11,800, and then down to 11,200. So a really good risk-reward trade, but in terms of probability of success, I'm not too sure about it. I hope you found that useful. Have a great day. And if you like the content in this video, please take a moment to press the like button and consider subscribing to the channel. It really helps us get this content out. Thanks so much.